Welcome back to the Dividend Diplomats YouTube channel. You got your boys here, Lanny, Bert, the Dividend Diplomats. Today's going to be a fun video. Why? There's one portfolio in my stock that I cannot stand. In fact, I would argue to say that I hate looking at this stock in my portfolio every single time I open up my Fidelity account. Therefore, in this video, we're going to talk about this company, why I don't like it so much, what's been going on with the company, and then we are going to run this company through the Dividend Diplomats Dividend Stock Screener. Let's freaking go.
Guys, make some noise and smash that subscribe button. Give your boys here a nice thumbs up. Bert's got a stock that he hates and he keeps debating. We were just finishing up our conversation before hitting the record button. He's like, maybe I'll just sell it tomorrow. But before he does, guys, let's talk to Bert. Let's see what stock this is, why you're thinking of selling, what events that they've been up to over the last few years. And yes, one includes Warren Buffett.
Mm-hmm.
Um,
The
Bert,
GOAT.
what's going on, man? What's on your mind with the
All right.
certain stuff?
So let's just start ripping this off. We've owned this company for several years now. It started out with great promise, and we actually bought it. You and I bought this one together, Lanny. So you're a shareholder too, I believe.
Damn.
Yeah, we bought this one right before Warren Buffett started getting involved in this company. And since then, it's just been kind of a rough road for this stock. They've cut their dividend once already. They barely returned to dividend growth. Things have just not been working out for Dominion Energy, ticker symbol D.
Oh,
Down,
it's true. It's
yeah,
damn true.
they're down 1.86% year to date, down 15% over the last year, and down 38% over the last 5 years. There really hasn't been much value for us Dominion shareholders.
No, I mean, first, a couple years ago, Berkshire bought Dominion's
That's
50% stake in Cove Point Natural Gas. Um, didn't they do something even before that, a couple years
Yeah,
prior?
there was some weird transaction with I think it was they had preferred, but they don't. It was a weird way that Warren Buffett extracted value, but from what I recall, and this is all off memory, that action was that it really kind of screwed over the common shareholders. Like it was a great move for Buffett, not a great move for us commoners, us common folk, as we like to say.
They sold off their stake in coastal Virginia offshore wind. Um, I mean, they're selling businesses, getting cash proceeds, recording gains on some of these transactions. And then Dominion, Ohio. Yes, we used to love Dominion. The reason why we liked Dominion was because they were our natural gas supplier or
Mhm.
provider, whichever way you want to look at it. That's who we got our bills from for our natural gas usage. Well, Dominion, Ohio just sold off to Enbridge. Yes, you
Mhm.
Enbridge shareholders, you ENB shareholders, let us know in the comments if you own Enbridge for $6.6 billion.
Yeah.
And they're going to assume a little bit of debt too over at Enbridge. So now one of the reasons why we like to, own Dominion, which was, hey, we pay them, might as well pay us back,
Yep.
now no longer is going to really be the case.
Yeah, and that's what is so interesting about it. They're shedding a lot of their great assets. They sold that stake in the wind farm down in the Carolinas that brought some cash in as well, but it's you're selling off assets and what's left of the company. I think that's always the $1 million question is what's left of Dominion? Do you like what's left? And then what are the prospects for what is going to be coming? What are the earnings and growth prospects for that remaining company? And that's what was so interesting. The stock got beaten down earlier in the year after management provided guidance. Their adjusted earnings was below the analyst consensus of 303. Now it's in a range of 262 to 287. Fiscal year 25 adjusted earnings, when you back out a bunch of the crap, is 325 to 354, which was about in line with the consensus. So for you to even meet analyst expectations, you have to adjust the earnings. And you know how Lanny and I feel about
Oh, yeah, you got to love adjusted earnings, guys.
it.
I
Yeah.
mean,
It's
what is Dominion? Do you guys still own Dominion? Let us know in the comments because we want to know this, guys. Obviously, they're still a large company. I mean, don't get us wrong here.
yeah.
They're still a beast of an energy company, but it seems that they're really trying to refine and reshape their business. Um,
Who knows?
Um, I don't, they're saying they want to see, EPS 5 to 7% of operating EPS growth rate from a 2025 standpoint. Estimating 11 to 13% total shareholder return. So, part of that 11 to 13% shareholder return, if their dividend yield sneak peek of one of the metrics is 5.6%, so they must be doing something on the other part. Are they returning? Are they buying back stock? Are they returning back that way?
Yeah, who knows? And that's what's so fascinating to me. And let's just run them through the metrics here quickly, because I think this also tells an interesting picture. Their price is 47.61. Seeking Alpha has average analyst EPS of 291. That's a PE ratio of 16.36. Landing that payout ratio. Tell us about it.
Smells like First Energy. No, I'm kidding. It's at right now $2.67 is their annualized dividend. 91.75% payout ratio based on the metrics right now. So high payout ratio. Even for a utility company, 90+% makes you do one of these.
Yeah, and they cut their dividend in 2020. They've increased it once since, I think at the beginning of 2022, but it's been flat since. And I mean, I don't really see where the prospects of any dividend growth are ever going to come from for Dominion over the next few years. If their payout ratio is that high and they're just selling stuff off left and right, I can't imagine they're going to use those funds to increase the dividends.
So, with that, the dividend yield is 5.61%. So you're getting paid a lot more right now to own this stock. Probably a 1% premium over other utility companies right now, I would say, because you could probably get AEP and Duke, First Energy, all those companies probably in the 3.5 to 4.5% range right now. But it's fair. I mean, Bert, I know you're really battling this one right now. It's
Yeah.
honestly, it's slipped off of my radar recently, but I know you guys own almost $3,000 worth of Dominion.
Yeah, so we own it in two accounts. I own $800 in my taxable account, and that's at a loss of 354. This position produces $45 of income. My wife has it in her Roth. The market value is about 2,900. And that's staring a $647 loss in the face. Big thing is this one at least produces substantial income with $164. So it would take two different transactions to figure out what to do with it. And that's, I guess, what is my ultimate question is it's easy to sell a company, right? It's easy to
Double
say,
down.
yeah, but what do you do with the proceeds? I think that's the harder question. And that's kind of where I stumble with this. What if I sold Dominion, what would I do with it?
I don't know what you would
Yeah.
do with it.
And the harder part is you and I are on this crusade against new positions, not because we don't like certain stocks, but it takes a high bar to raise the stock. Would you swap it out? Should I be looking at like Enbridge, the company that they just sold Dominion, Ohio to? That's a higher yield. It's performing flat during the year. Should I move my funds there? I also don't know a ton about the energy sector. Like I know the easy ones like your AEPs. I know Consolidated Edison's, like your boring ones, Nextera. I don't know much. So do I just take these funds, go somewhere else? Realty income. Do I take these funds, go somewhere else with a high yield, or do I sacrifice some yield into a company like a Starbucks right now, or a different type of play? I don't know. That's where I'd love to get everybody else's advice here.
Yeah, guys, let us know right now in the comments what your thoughts are about the situation. Again, Bert and his wife own about $3.7 thousand worth of Dominion stock currently. And then, Bert, I know you said taxable account, but I think it's what your traditional IRA account that you have it in for yours.
No, it's in my regular one, my just traditional brokerage, all taxable.
Oh, so that's what traditional means. Gotcha.
Yeah, yeah.
Uh,
Oh yeah, yeah. I
gotcha.
don't know why I call it that. It's my taxable account.
Gotcha. All right.
Run a
So
curveball for everybody here. It's all
you got part of it in a taxable account, part of it's tax protected.
yeah,
Um, one, you're definitely in a much bigger loss, the one in yours from a percent standpoint.
yeah.
Um, the one in your wife's Roth account from a percent standpoint is a lot more palatable.
Mhm.
Um, given yours is in a small position, plus you can get some tax benefits from that. I
Yeah.
don't know if you have any gains to offset for the year, but that could be an opportunity.
Yeah, I mean, when WestRock's acquisition closes, that'll be a nice little gain event, so that could offset that. That would probably be a one for one. move right there. So that's not a bad option. And then put both those funds together into a new, if I'm going to invest in a position, it would be a substantial position. That one would be about $5,000 towards a new stock, which I would be happy to do if I find the right company.
Interesting. All right, guys. There's some ideas. What would you
Yeah.
do in these? Would you sell both, keep both, sell one, keep the other? What would you move it into? That's the big piece right now.
Yeah, if you haven't already, subscribe to the channel, give this video a thumbs up, and remember,
Oh,
you're not with us, you're against us, Jack.
Bert, the Hurt, Lanny from the Dividend Diplomats, over and out. Altria.